What's up, Money Madeline PA? We are here again for video number 2. We're going to talk about origination fees. That comes from the lender when you get your loan for your mortgage. So origination fees can come out on your loan estimate, and they can come out in many different ways or terms. So we're just going to go over what that means. They are charges that lenders impose to process a new mortgage loan. They cover lenders' administrative costs, including underwriting, preparing of documents, and verifying financial details. Your key points about origination fees are that they typically range from 0.5 to 1% of the total cost of the loan or the amount being borrowed. It must be paid at closing, and it is considered one of the borrower's upfront closing costs. They may be negotiable depending on the lender, and sometimes they're referred to as a loan origination charge on your disclosure forms. No origination fees are just one part of the total cost. That's just the part that comes from you using a loan officer at a mortgage company to process your mortgage loan. There are different lender fees, so we'll talk about them. The administrative cost, which is the origination fee, will be from 0.5 to 1% of the total cost of the loan. There's also an underwriting fee, which is about $500 to $1,200. That's for the risk assessment and the loan approval that goes through the underwriters. Their job is separate, and that is typically how much it costs to go to the underwriter table after the loan officer approves your file and sends it over to be approved by the underwriters. There is also a processing fee, anywhere from $300 to $900 for document verification and preparation. So as they look through every detail with your credit report and how much income you bring in and how much your income to debt ratio is, and consider you to be a good candidate or not, that is a processing fee. Then there is an application fee that could be zero for some lenders. It can go all the way up to $500, and that will be initial application review. And discount points are paid to lower your interest rates. You could get your credit pulled and have a score that's going to allow you to receive a APR of 6.58, and then purchasing a discount point, which are typically about $1,000 per point, paid up front, will bring you down about 1% every 1,000 you spend, or every discount point that you buy, whatever that cost may be for it. Then we have third-party fees. That includes fees such as your appraisal fee, which is when you're buying, your lender's going to hire an appraiser to go out to that home and assure that that home that you're purchasing is worth the amount that they are lending you. That fee could be anywhere from $400 to $700. There's also the credit report fee, which is $25 to $50 for checking your credit history. There's also a title search and title insurance, which protects against ownership disputes. If you did not do a thorough checking of the property's title history, you may or may not need title insurance, but it does protect you if one of the past owners comes with a claim against the property. Then we have survey fees if they are required. That is to check your property boundaries and see exactly where you can build a fence, or exactly where the front of your home is, the sides and the back of your home. So the measurements, that is called a survey. And then we have the recording fees, which are paid to the city and at your county office. And those are anywhere from $50 to $300. Here in Pennsylvania, they're about $200. Those are pretty much all the prepaid closing costs that you pay at closing. You do also on their paid interest depending on the actual day you close to when your first mortgage payment is due, which is about 45 to 60 days from the day you close. So you will have interest building in that time, which you will pay. Your property taxes, you'll pay an escrow worth about 6 months up front. You will also pay your homeowner's insurance for a year up front, and you will pay your escrow reserves, which are about 2 to 3 months of taxes and insurance. That is why you need to have at least 10 plus in the bank, depending on what exactly you're purchasing and what your debt to income ratio is and what your APR is going to be for your actual purchase, because everyone has a different APR, all dependent on how much you make and how much you personally spend and how great your credit is, and all those variables will create your APR for your home when you're purchasing and for your own mortgage. Then we also have mortgage insurance. So for a conventional loan, you would need to have private mortgage insurance. And for FHA loan, it's called a mortgage insurance premium. So for a private mortgage insurance on a conventional loan, if you're not putting 80%, 20% or more on that down on that loan, you will be paying approximately $50 to $200 a month, which I've seen them about $150 a month for your PMI, which is your private mortgage insurance. If you have an FHA loan, you're going to be paying your mortgage insurance premium, which is 1.75% of the current loan. So that goes until you are 55% loan balance left. And it stays on the life of the loan unless it is refinanced. So FHA will always pay on that MIP. So it's always good to put 20% down or more on your mortgage, just because it saves you tons of money in insurance. And that only protects the lender. That does not protect you in any way. It's basically saying if you default on your loan, your lender is protected with that insurance. So yeah, your total estimated closing costs for your home are going to be anywhere from 2 to 6%. And like I said, everybody has different numbers and stats, and I would love to go over yours with you if you are interested in buying, selling, investing, purchasing multiple properties, have an idea with real estate in mind, would like to connect for a wholesale deal. If you have anything going on or any questions you would like to ask me, you could reach out to me at pabuyandselllww@gmail.com. I also have a website, pabuyandselllww.com. Link up with me. Hope you all have a blessed day.